Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, November the 9th. The year's 2023. Let's talk trading. Deliberate trading with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, I was reading, or actually I was watching a video. It had nothing at all to do with trading, but they talked about being deliberate as opposed to rushing in and going in without a plan. And I was thinking just how much that applies to trading. And then you had mentioned yesterday about a 3x5 card, so you sent that picture to me. So I'm sure the boys and girls and non-binary traders out there might be interested. So I'm going to put that up on the screen right now.
So you're putting the actual card up on the screen?
Yeah.
Not a note, correct?
Yeah,
okay, cool.
your exit strat method from September of 2020.
Yeah. So it's been sitting. It hasn't changed in 3 years, over 3 years now. But yeah, it essentially just comes. It's simple. That's just for me. It's just very simple. I don't have on this card what my TP is, and the reason why I don't is because depending on what type of method I'm trading, and I've said this multiple times, if I'm trading one method, I may be looking for more pips than not, and whereas other methods I'm just looking to pick off 1 or 2 pips, and that's it. So the TP is it's not relevant to how I exit out of trades. And so if I'm looking for 10 pips, that's fine. If I'm looking for 20 pips, that's fine. If I'm looking for 2 pips, that's fine. It's just, this will work across all, for me anyway, it works across all those different situations. But the first line on it, it says, it's got a plus sign and it says ride to TP. So if I'm positive, I'm going to try to ride it all the way to my TP, and that's just my goal. I just want to try to get to my TP. So my TP is 2 pips away. I'm going to two pips, and I'm not going to move my TP. I'm just going to go and leave it there. And that's what I'm going to try to get to. If it's 20 pips away, that's what I'm going to do as well. It's just, again, depending on what my method is for entry or reason for entry, is going to go and change that. But if I go negative, notice the positive side's real simple. One line. The negative side, that's where things get, I think that's true for everybody. It gets a little bit more complicated. There's a little bit more steps that have to be followed. And so if it's negative, and it's negative by 2 pips, if I'm still looking at my method and what I'm doing, and the market and what the charts are showing me, if I still believe, then at that point I will go in and take a trade of the exact same size in the same exact direction. If I believe that we're still in a good trade. If, on the other hand, I don't believe that, I got to doubt. I should actually have a doubt it, you're out, or just doubt you're out is what I have. In other words, if I have any doubts in the trade at that point in time, I wash my hands in the trade, took a loss. I'm out 2 pips, whatever my dollar figure is. I'm done, and that's just the way it is. It's nice and clean and nice and easy.
Hey, Walmal, you spelled "you're" wrong.
Yep.
It's Y-O-U apostrophe R-E.
I just put my E there, and I put an apostrophe between the U and the R. Okay.
Well,
thank you, Grammar Police.
Yeah, I know. It's just one of my pet peeves is that, and when traders spell lose, L-O-O-S-E. Those are just two words that just always get me.
Well, thank you, Mr. Grammar Police. I'll be more careful next time.
I actually got fired from a job for correcting my quote-unquote boss's grammar.
Yeah, I can see that, unfortunately. But anyway, doubt the trade, you're out. Okay, you're just gone. But if you believe in the trade and it comes back, well, guess what? You're back to that very first line, ride to the TP. And that's just what I'll do. I'll ride to the TP. If it continues to go down, on the other hand, I'll add in at appropriate levels. Okay, what does that mean? It means I don't just go and add in. It doesn't mean, oh, look at this, it's been going down. Let's say I'm in a long trade. It's going down, it's going down. Oh, look at this, I got myself a green candle. Okay, let's just go and add in here. No, that's not an appropriate level. The appropriate level means that, hey, let's say I'm doing flip-flop boxes. Do I have a new flip-flop box here? Yeah. Okay. Is it, am I, meeting all the other rules that I have in place for going and entering a trade? In other words, if I wasn't in my losing trade, would I enter here on a new trade? Well, would I enter here as a trade? If the answer is no, then I'm not going to go and get to there. If the answer is yes, this is an appropriate level to go in there. This is an appropriate trade. This is a good trade, a good place to get in, a good risk, to go and take here. Then guess what? You add in at that point. Don't ever just go and add in for the sake of adding in. No, you need to have a reason to add in, and the reason must be, okay, M-U-S-T, all capital letters, all bold-faced, triple underlined, must be because this is a legitimate trade to enter, okay? Because if you don't do that, then you start getting into, this whole idea of, trading with martingale and all that type of stuff, which, can get you. I'm sure there's people doing martingale strategies out there making money, but the vast majority of people I've seen trade with martingale type of strategies wind up losing their shirt. If you don't know what a martingale strategy is, Google it. You'll find it, really simple. Or maybe someday we can go and do a video about that, TRO. But, we could go and maybe talk about the advantages of it and the huge risk of doing it. But in any case, you add in at the appropriate levels. And the thing is, if all of a sudden it comes back and, again, now here I'm not trying to get to my original TP. I'm trying to get to a dollar level. I should probably write that in on the card, thinking about it. And that what my dollar level is that, let's say I'm in two trades, and let's say I was trying to go and make 2 pips. Okay, I change over that 2 pips over to dollars. So let's go and make things simple. Let's say the 2 pips is the equivalent of $50. I'm now in 2 trades. So now what I want to do is I want to make a total of 2 times what I would have made. So in other words, $100. So I'll ride it until I get to $100, which means the first trade, I probably will still close negative on it, but the second trade, I'll go and have a really nice profit on that one. And that's just how I go and do it. Other people would say just try. I know a lot of times I know TRO, you go and try to ride. You do you do it differently than me, but there's a lot of similarities to it. And I think you try to go and ride that original trade all the way back to its break-even point, plus maybe a little bit more. I, on the other hand, I don't care. I'll go and take a loss on the first trade, and as long as I got a nice little profit on the second trade, then I'll go and get out. So that's the one area that gets a little bit complicated because I'm sitting there saying I'm in 2 trades. That means if I wanted to go and make $50 on the first trade, I really want. Now I'm in 2 trades. I want to make a grand total of $100, and I'll try to go and ride it to that point. If unfortunately, if it continues to go down on me, whatever my dollar level is for a total loss for a trade is met, I'm out. So let's say I go and say that I'm willing to lose $100 on a deal. Okay, and that's all I'm willing to lose is $100. Okay, as soon as I go and hit $100, well, gone, out. See you tomorrow. Whatever it may be, I'm just out and just take the loss. Take it on the chin and just know that, hey, there'll be other trades. The thing is, by doing that, you can, unless you've got unlucky where you've done this 2 or 3 times in a row, and you've hit your dollar limit on a trade 2 or 3 times in a row on a one particular day, you can probably go in on another trade, and maybe make some of it up. Maybe you don't make all of it up, but maybe you'll make some of it up. Certainly, if you go and do it this way, you can come back tomorrow because you've put some money management thought behind it, and you're not going to allow the trade go that far against you where you don't have an account anymore. And so you just exit it again. You exit out, take it on the chin, and move on. And that's just unfortunately, As my kids used to go and say, Dad, that's not fair. Well, guess what? Life's not fair. Sometimes you lose.
Yeah. So, Walmal, how often do you actually read your card?
I try to read it. Okay, I'm gonna. This is what my rule is, and then I'm gonna be transparent and say what I actually do. Okay, my rule says I read it every day before I trade. Okay, and I have it in front of me, and that I do have it in front of me. Reality is, though, I read it usually at the beginning of the week, and I may read it again like on Wednesday. I don't read it every day. I should, but I don't. But I do have it literally taped to my monitor with a piece of Scotch tape, just or for our foreign listeners, a piece of cellophane tape. Just literally taped to the screen, so it's right there, glaringly right there in front of my face. So that's reality. But the thing is, I don't think I need to read it every day anymore because I've been doing this now for 3 years and 2 months at this point. Exact same method. Have not changed a bit of this in 3 years and 2 months. It is so ingrained in everything I do. I don't even think about it. There are times when I'll go and add in on a trade, and it's just so second nature. I didn't even think about what I was doing. It's just what I do. And that's the whole thing that I think about. About trading, that where we need to get to. So we need to get to the point where we have literally, in sports we call it muscle memory. We literally get to the point where we're trading, with muscle memory. Or in this case, the muscle is the brain. And we're making the trades systematically the same way every single time, based on the data that's in front of us. And sure, if the chart, the thing that goes and changes it, just like in sports, if the ball's hit a little bit to your left, you have to move to your left. Ball's hit a little bit to your right, you got to go to your right, right? Well, the charts do that too. If the price moves down from where you got to be, or or up from where you want to be, or you see something on the chart saying, hey, well, that's a problem, or a problem area back there, that can influence you. And maybe the influence is I don't take the trade, or it's the type of thing where I said in the very beginning, I try to write it to the TP. Notice I didn't say you write it to the TP. I said in the car I do, but I said you try to write it to the TP. Because if all of a sudden, for whatever reason, you notice that on the chart, hey, there was a major problem here going back an hour or two ago, and it slammed against this point. If I get to that point, a lot of times I'll go and say, okay, let's say my TP was set at 3 pips. I just go and jump out. If I'm at 2.8 and I'm going to go into that area where it slammed the last time, I'm just going to go get out. That's 2.8 is close enough to 3. And reality is that doesn't happen very often, though. It doesn't happen, yes. But I normally, if I had done my trade prep correctly, I should have seen that before I entered the trade in the first place. I should have already drew a line on the chart saying, hey, well, actually, I don't draw lines. I think I've told you, I don't draw lines. I draw boxes because I don't believe necessarily that price turns on a dime. It turns on like a skid plate, I guess.
No, actually, it turns on a point, the inflection point.
The place where we get in and get into trouble.
Exactly.
But that's my idea of of what I do and why I do it. Some people can agree with me, some people can disagree with me, but what I will absolutely say, and my last point, and I know we're almost out of time, and that's simply this: this works for me. It doesn't mean it's going to work for you. And the reason why I put that out there is because my personality, my being, my emotion, my everything I do is different than you, because every one of us as human beings are different from each other. And so you need to find out what your emotional triggers are, and what your psychological triggers are, so that you can go and build something that you're not completely stressed out. And I said to you, TRO, yesterday, that when I'm in a trade, my blood pressure goes up. And I don't know if my blood pressure goes up, but I do know my pulse goes up. Because for me, it's a little bit stressful.
And you know what, Walmal? We are out of time.
Totally.
So, fellow traders, just remember, It's not what you trade, it's how you trade it. So go out there and drain the banks and be deliberate about it. This is the Rumpled One, over and out.